Okay, hello everyone. We will continue our discussion of share-based payments, no? Still, we are on share options. Now, we are on the second part, wherein the vesting of the share of options are based on some performance condition. Let us just go back, no? Just to recap, previously, ang vesting conditions natin can either be service conditions or performance conditions. Now, tapos na po tayo dito sa service conditions. Andito naman na po tayo sa performance conditions. And for this video lecture, we will be talking about non-market and market conditions. Okay, now, kindly take note of what's in the book because I did not include it here. Allow me to read the first paragraph on, I don't know if it's in the same page 93 because right now I'm using the 2021 edition. Share options that vest based on performance condition. Ano ang sinasabi dyan, class? A grant of options might be conditional upon satisfying specified certain vesting conditions other than remaining on the entity's employ for a minimum number of years. And please take note that on the latter part, no, yung remaining on the entity's employ for a minimum number of years, yun yung pinag-uusapan natin under the service conditions. Pero pwede kasi na may mga iba pang conditions, vesting conditions, no, that we need to satisfy aside from the service condition. At ito po ay yung mga performance conditions, no? For example, we need to for you to be entitled, no, for a certain options, we have to achieve a specific growth rate in terms of profit. O dapat meron tayong target profit or target revenue or target sales. Or sabihin na natin currently yung market price natin 20. Pag maabot natin yung 30, we will have share options, no? So, when we are accounting for performance-based share options, dalawa po ang pinag-uusapan natin. As presented doon sa summary natin kanina, no, dito, it can be non-market conditions or market conditions. Now, una nating pag-uusapan yung non-market-based performance conditions, and later on, we will deal with market-based performance conditions. But plus, please take note that whether we are talking of non-market based or market based. Okay? In terms of the fair value of options used, no, we are determining it at the date when the options were granted. So whether market based or market based or non-market based, yung fair value ng options will be at the date of grant. Okay? And ganun din, we will use the same account, compensation expense. O class, consider po natin itong illustration for number 1. Dito, yung example natin is that the share options will vest based on certain revenue target. Basahin muna natin ha. So dito tayo class. On December 31, 2020, ABC Company issued 2,000 share options to each of the 5 key executives. So 2,000 times 5, meron tayong 10,000 na mavivest natin when revenues reach 100 million a year. Kung maabot natin yung target revenue of 100 million, okay, etong 5 key executives, no, will be issued 2,000 share options. Until December 31, 2023, yung target natin. Okay, now, the options expire on January 1, 2025. Okay, that is your expiration. At dahil ako naman po ay OC masyado, yan, nakita ko yung January, baligtad pa. I-edit ko lang ha. Ayan. Nakasilip si Sir ng error spelling. The employee must still be in the employ of the company at the time the share options vest. That is your service condition. Pero meron pa tayong performance condition. Now, based on the pricing model used by the company, yung fair value of the option on the date of grant is 30. Alam na po natin, gagawin natin dyan sa 30. At the end of 2021, inaasahan daw po na wala sa mga executives yung aalis sa kumpanya until December 31, 2023. This is the end of your vesting period, ha? It is also estimated that revenue of 100 million will be reached by the year 2023. Now, please take note of this journal entry. On December 31, 2021, ang debit natin ay compensation expense and credit to compensate to share premium share options for 100,000. Now, how did we come up with this 100,000? Ito yung ating solution guide. Okay? Total options granted. 5 employees, 5 key executives yan, di ba? Times 2,000. Ito yung sinasabi ko kanina na 10,000. Multiplied by the market price of each option. So, yung value ng options ay 300,000. If this is on December 31, di ba? Nag-lapse na yung isang taon, pero yung vesting period natin ay hanggang December 31, 2023. So, ang proportion natin ay 1/3. Kaya nga, ang compensation expense natin for 2021 ay siyang 100,000 pesos. Okay. Please take note. Okay. Ano to? If the total annual revenue during 2022 reach 100 million, the vesting of the, please take note meron tayo ditong additional information. We are targeting, we are expecting that the 100 million na target revenue will be reached until by December or until December 31, 2023. Pero what if daw, yung total revenue during 2022 ay na-reach na ng 100,000. Okay? Then, the vesting of the share options accelerates and the remaining compensation related to the 10,000 share options shall be recognized. And in this case, isasagad na po natin yan ng buong 200,000. Ito pa rin yung ating computation. Yung total value of the options mo, 300,000. Pero kung na-reach na yan ng 2022, so yung difference ng 300 versus 100, i-expense na natin by December 31, 2022 na. Okay? How about this one? Suppose the 100 million annual revenue had not been reached by the end of 2022. But it is still expected that the condition will be satisfied in the year 2023. Now, the compensation expense recognized in 2022 will be 100,000 and the remaining 100,000 will be recognized in 2023 following the normal information here, yung natin, original information. Ito lang is an additional scenario in case as early as 2022 na-meet na agad yung ating target revenue. Okay? So, ito yung ating magiging entry in terms of the amount, 200,000. Nasusundan po ba ito? Okay? So, dito yung entry lang natin is in terms of the debit to expense and credit to share premium, ha. Hindi na natin dito inentryhan yung exercise ng options. Ganun pa rin naman kung paano natin ito ginawa. Except dito, we are highlighting the performance conditions. Itong illustration number 1 is based on revenue. How about if the vesting is based on profit? So please take note of this one. On January 1, 2021, ABC Company granted 100 share options to each of its 500 employees, for the purchase of the company's ordinary share capital at 120 peso per share. Please take note, 100 share options sa kada sa lahat ng mga 500 employees nito. Okay? These options are exercisable by employees who are in the employ of the company until the exercise of the options. Okay, may nakita na naman ako parang grammar error, no? Grammar. Minsan masyado tayong OC. These options. So na yun. Ito, no? These options. Okay. Anyari. Okay, yun. Tinurek lang natin. Pasensya na class sa ating mga mga dagdag interruption. Okay, going back. Exercisable daw by employees, no? If you remain with the company, okay, until the exercise of the options. Please take note of the vesting period. At the end of 2021, pwedeng ma-vest, okay, etong share options if earnings increase by 15%. Tignan niyo ito yung conditions natin. By the end of 2021, please take note, pwede po yung i-vest, okay, if earnings increase by 15%. Kung hindi man, edi proceed tayo ng 2022. It will vest at the end of 2022 if earnings over 2 years, 2021 and 2022, increase by an average of 12%. Kung hindi naman ito ma-meet, assuming by the end of 2023, ito na naman yung ating panibagong condition, if the average earnings increase by 10%. So, pwede siyang mag-vest anytime, no? In 2021, in 2022, or in 2023, depending kung saan po na-satisfy etong conditions. Now, please take note, class, of this information here. On January 1, 2021, the fair value of each option is 24. Actual and estimate of the entity's earnings are as follows. Para i-compute natin kung na-meet ba natin etong performance requirement, performance condition. No? By the end of 2021, yung actual earnings ay 12%. Now, the estimated earnings in 2022 is 12%. By the end of 2022, the actual earning is 10%, and the estimated earnings in 2023 ay 8%. Okay? Again, let me correct this one. Estimated earnings, okay, is 8%. And by the end of 2023, the actual earnings ay 11%. Okay? Now, please take note of the additional information in terms of employee turnover. Actual and estimated. No? So, actual and estimate of the employees leaving the company are as follows. For 2021, 20 employees left. Additional employees expected to leave, no, is 40. By 2022, 15 employees actually left, and additional employees of 20 are expected to leave. While on 2023, 16 employees actually left. Now, if you notice, no, dito sa right side, gumawa ako ng table to guide, no, yung ating number of employees. Nag-start tayo ng 500. Please take note. Sir, asan yung 500? Andito sa problem natin. 100 share options to its 500 employees. So, by 2021, we will start at 500. Ilan yung actual na umalis? 20. Ilan yung expected to leave? 40. So, by 2021, we are talking about around 440 employees. Actually, pwede natin dapat yung magawa previously nung meron tayong mga conditions on the number of employees, no? But we did not do so. So, dito, no, para mas mapadali yung buhay nyo, pwede kayong gumawa ng ganitong table para lang ma-monitor ninyo ilan yung number of employees natin. Kasi, class, no, if we are talking about certain number of employees that will be granted certain number of options, we need to multiply them. Okay? O, by 2022, 500 minus 20 na actual left in 2021. Kaya 480 yung beginning. Minus 15 minus 20. So 445. By 2023, yung number of employees at the beginning of the year ay 500 minus 20 minus 15 based on the actual Kaya 465 yan. Minus 16. Pero wala nang additional expected to live because the last vesting period, possible vesting period ay end of 2022. Okay? Now, kailangan natin ito mamaya sa ating computation. Tignan natin ito. Let's check on the conditions kung na-meet or what. Naglagay tayo dito ng table for the year. Naglagay tayo ng table for the actual earnings from the given 12, 10, 11. Ito yun plus, Ito yun. Now, ano tong actual average earnings? For 2021, wala kang actual average earnings. For 2022, you have your actual earnings of 12%, plus yung current year mo. So, prior year plus current year divided by 2. That is 11% actual average earnings. For 2023, the average nitong tatlo, 12 plus 10 plus 11 divided by 3. 11% yung actual average earnings mo. Now, how about your estimated average earnings? So, yung estimated average earnings mo will be based on this one. Okay? 12%. Okay? Yung actual mo na 12% plus 12% na estimate, ito yun, estimated average earnings, yung actual mo versus plus estimate divided by 2. So 12 plus 12 divided by 2, 12%. Okay? For 2022, 12 actual plus 10 actual plus 8. Okay? Estimated. 12 plus 10 plus 8 divided by 3, 10% yung estimated average earnings mo. Dito wala na tayong estimated average earnings sa 2023 kasi yan yung last vesting period na. Now, para saan ito? 12%, 10% na estimated average earnings. Kasi class, yung condition natin dito, for 2021, if earnings increase by 15%. Nag-increase ba? No. 12%, hindi umabot doon sa 15, so we will not vest. It did not vest. Okay? Expected to vest in 2022. Class, dahil ang target natin ay 15% at hindi na-meet itong target na ito, hindi tayo magbe-vest ng 2021. So we are assuming the best possible estimate that it will vest will be the following year, next year. Kaya dito nakalagay, expected to vest in 2022. Okay? Now, for 2022, ang estimated average earnings mo ay 10%. Ano ba yung target natin dito? Okay, 12%. 12% yung target, hindi na-meet kasi 10%. So, hindi na naman nag-vest ng 2022. We are expecting that it can vest in 2023. Kaya, hindi na-meet ng 2021 and 2022. 2023, check natin. If earnings over the 3 years, average, increased by average of 10. Class, actual average earnings mo, ito, 11%. Na-meet? Yes. Kasi ang target natin ay 10%. So, vested po, expected status of vesting, it will vest, Vested siya by 2023. So, anong gagawin ko dito, sir? Please take note of this. Solutions and the related journal entries. So, since in 2021, hindi po ito nag-vest, But again, we will need to record the compensation expense. So, we will spread it out, di ba? Kaya nga, may proportion of years completed tayo over the vesting period. Now, please take note of the solution. and the proportion, no? Guide lang natin, 440 tayo ng 2021. Ito yung number of employees, actual and estimated. Multiply natin by the number of share options per employee. So the total number of options mo ay 44,000. 440 times 100, di ba? Na magkano yung market price ng option? Sabi sa problem, 24. Ito yon, di ba? 24. So 24 peso times 44,000, ang total value ng options mo ay 1,056,000. Okay? Oh, please take note of this one. Kasi ang proportion of years completed over vesting period ay 1/2. Sir, hindi ba 1/3 dapat yan? Maaring ito yung iisipin natin initially. Kasi ini-expect natin hanggang 2023 naman pwede mag-vest. Although, if hindi ka nag-vest nitong 2021, inaasahan mo na hindi mag-vest yan ng 2022. That is your best estimate. So, we are assuming that at the end of year 1, the possible na mag-vest yung ating condition ay next year. Kaya 2 taon tayo. Okay, kaya tayo may note dito, no? That on December 31, 2021, the best estimate is that the options would vest by the end of 2022. Actually, yun na mismo yung ipinaliwanag ko. Kaya, divided by 2 lang ito. Pag dinivide mo yan ng 3, mamamali ka na sa compensation expense mo. Okay? That is your journal entry for 2021. Okay, by December 31. Now, by December 31, 2022, ang amount natin dito ay 184,000. But how did we come up? Unang-una, mababago yung number of employees natin. Hindi siya 440, kung hindi, 445. Why? Dito sa pinakita ko sa inyo kanina, 445 tayo by 2022. So dito, mababago. Ito as is, share options per employees. Okay? As is tayo sa market price. So that the total, no, since nabago yung 445, so ang total number of options mo ay mababago din. From 44,000 magiging 44,500. Nadagdagan ka kasi ng 500. Okay? Edi yung total value ng options mo mababago din. Now, eto additionally, mababago din yung proportion mo. Kasi dito 2/3. Why? On 2022 hindi nag-vest. So you are anticipating, best estimate mo magve-vest yan next year. So 3 taon, nakailang taon na tayo? 2 taon. Kaya siya 2/3. Can you follow? So 1,068,000 divided by 3 times 2, your cumulative compensation expense ay 712,000. And expense mo na yung 528 last year. Ang compensation expense mo for 2022 will be 184,000 peso. Nakukuha? Okay. So, that's our 2022 journal entry. Naiba lang naman tayo sa amount. What happens now in 2023? So, you know the drill. Kunin natin ito. 449 tayo by 2023. So, definitely yung value ng options mo mababago din. Okay? So, papalitan mo to. As is ka dito. As is ka sa market price. No? Now, your total value of options will become 1,077,600. Okay, pero 3/3 na tayo dito. O kaya, eto na yung, actually, etong 1,077,600. Ito dapat yung cumulative compensation expense mo for 3 years. And expense mo na in 2021 and 2022, etong 712,000. So, yung natitira na lang, ay etong 365,600. And that will be another correction. Your compensation expense for 2023. Okay? So ito yung ating journal entry naman sa taong 2023. Hindi na natin inulit dito yung vesting exercise ng options. We are just noting the difference no in terms of the computation. Okay? So performance based no, based on revenue or based on profit. Now, how about market-based performance conditions? If the tawag nito non-market-based ay halimbawa based on a specific growth rate in revenue or profit, or pwedeng increase in earnings per share, or vesting period based on non-financial targets. Pag market-based naman, we are using no the market to reach certain conditions. Halimbawa, vesting based on achieving a specific share price of the entity's equity instrument and achieving a specified target share price relative to an index or the market price. So halimbawa, no, market price ang pinag-uusapan natin, market share. Okay? So please take note of this illustration. Ang ating nag-iisang illustration for this one. On January 1, 2021, ABC Company issued 3,000 share options to its key employees that will vest upon meeting the following conditions. Dapat yung share price mo ay umabot ng 90 peso anytime from the date of grant, which is January 1, up to December 31, 2023, which is your vesting period. Okay? And employees will have to be in the employ of the company up to December 31, 2023, which is your vesting period. Okay? Now, additionally, ang sinasabi dito is that the share options will expire. Yung expiry date niya ay 2025. Now, based on the pricing model and considering market conditions, yung fair value daw ng share options on the date of grant ay 25. Ano gagawin ko dyan? How do we compute? Class, this is on the assumption, no, to simplify the problem. This is on the assumption that every employees will remain in the employ of the company for the vesting period. So, if they satisfy the service condition, okay? Please take note of the solution para sa 75,000 na yan. Okay, now, 3,000 yung number of options natin, di ba? Multiplied by the market price of each option. And we got 75,000 pesos. Now, may error na naman tayo dito. It should be 25,000. Ayan. Total value of options mo, 75. Ilang taon yan? We are expecting na 3 taon, ano? So, the proportion of years completed over the vesting period will be 1/3. 1 year na yung naglapse, 3 years yung vesting period. So, 75,000 divided by 3. So, yung compensation expense mo, that will also be your compensation expense for 2021, 2022, and 2023, 25,000. Now, please take note of this one. Although dapat nakamalaki ito. Bakit maliit siya? Anong sinasabi dito? Okay. Sige, yan na lang. Maliit na lang, no? Or siguro, ang gawin natin, ibang kulay na lang. Anong tinutukoy nito, class, na note na ito? Etong entry daw is made whether or not the market price reaches 90 before the expiration of the option. So, class, no? According to paragraph 21 in IFRS 2, ang sinasabi dito, no, is that the entity shall recognize compensation expense in relation to options that meet all the non-market conditions, disregarding whether market conditions is satisfied. Okay? So, ayan, class? Why? Bakit? Let me read it from the book, no? Yung last paragraph natin doon sa discussion before tayo mag-share appreciation rights. Okay? Now, anong sinasabi dito? The above entries are made irrespective of whether the market price of the company reached 90 before the expiration of the option. That is so, as the market price of the company is dependent on factors not fully based on the performance of the employees or the entity. The amount of compensation expense recorded over the vesting period is adjusted only by the number of options that will not vest because the employee leaves the company before the vesting date. It seems that what IFRS 2 considers is that an expense shall be appropriately recorded for its vesting year on account of services received by the enterprise from its employees. Okay? So, yan ano, class? Um, sorry, so that is your ano, no, illustration natin for this market-based performance condition. Okay? So, class, kindly make sure, no, when you study my recorded lectures, you should also read from the book para makapture, no, lahat. Kasi please take note that in my presentation, nakafocus ako doon sa illustration ng computation. And some of the narratives ay hindi ko na po sinasama. And some of it ay ine-explain ko based on my own words and not necessarily word for word, no? Kaya serve ano, no, process, study my video lectures with caution, relate it to your reference materials. But definitely, if you have any questions, please let me know. Okay? So again, etong share options that vest based on performance conditions. We have the market-based performance condition at yung nauna nating diniscuss, no? Non-market-based performance conditions. Okay? So, ayan po muna. That will end our session for this particular video lecture. We will continue for the next video lecture. Ang pag-usapan naman natin ay share appreciation rights, which is the example for cash-settled share-based payment transactions. But for now, let's end this video lecture. Maraming salamat. I'll see you on the next video lecture. Bye-bye.